This is Commodity Wrap. I'm Tony St. James, and welcome to a Wednesday. So at the close, what? Corn moving higher? What in the world happened there? The wheat market was in mixed territory. Cotton market was higher as well. So corn and cotton higher. Then we look over at soybeans, pressured there. So helping us break this down from the row crop side to start with, Brian Hoops, President, Midwest Market Solutions. All right, Brian, corn and cotton kind of feeling their way out of this, though cotton, even with the higher close, doesn't matter. It's been in a 3 or 4 cent trading range for well over a year, it seems like. And then the wheat market kind of poking its head into positive territory. So what's happening?
Yeah, we've had 2 hard down days in corn. We actually closed higher last Wednesday and last Thursday before the 4th of July holiday. But since we came back, it feels like we've been down forever because we had 2 extremely lower days on Monday, Tuesday. And we did make new lows in the overnight before we saw a little short covering, a little bit of bargain hunting coming into this corn market. And as we tried to explain to listeners this morning on the TV segment, we've taken a lot of weather premium out of this corn market. There's a good portion of the growing season left. About half the corn crop will pollinate in the next week or so, but crops are not great in Illinois. And to seem that we would want to keep pushing the market below, especially below $4 in December corn, with crop ratings less than 60% good to excellent in Illinois, one of the main growing states in the nation, I think that's going to produce a little bit of buying interest, a little bit of bargain hunting. Plus, you have a report out coming on Friday. It's a supply and demand report. Usually you get some short covering or some position squaring into that report in case there's any real surprises. Of course, weather you would think would still be the dominant factor for corn, and its effect on the growing season. If we have benign weather, we certainly will take out $4 at some point in time, but maybe we need to heal some of these charts a little bit first, or even try and fill a gap before we head back to the downside. Now, in the case of wheat, it's been a lot of discussions with clients that, if you're holding on to some wheat from last year, you swept the bins out, cleaned it, made those sales, and that just kind of prepared you for the harvest that we're seeing right now. That's being put into storage, kept away from the market. And so I think you had a lot of your harvest pressure early in the harvest time frame, and you're not going to see much now because no one really wants to sell at these price levels. They sold last year's crop at these price levels. They don't want to sell another year's crop at these price levels unless they absolutely have to. So once it gets set into that bin, it's going to be doors going to be slammed shut, or they're going to look out into the future and look at the carry that's available. Kansas City futures have over almost a 50-cent carry out to March. That's an opportunity for producers to capture that 50 cents by storing it, hedging it, and capturing that additional premium.
Yeah. Okay, so we've got all this. We've got USDA reports. We get a weekly export sales on Thursday morning. We get the WASDE on Friday, and so obviously these could affect our markets moving forward. But I also wonder if things maybe on the outside could affect our markets as well. And now I'm talking about the equities, Dow, NASDAQ, S&P, and they're all back into positive territory for the month and for the year, and maybe the S&P because NVIDIA has hit a $4 trillion market value. What can we pull from the continued strength from the equities?
So, yeah, our equities continuing to push higher here, make some new highs. I think the markets are trying to anticipate rate cuts coming in the future, anticipate that there won't be much inflation as well. And, of course, inflationary concerns abound for producers from a standpoint of their input costs. A lot of people are talking about, high rents, high fertilizer prices, high fuel costs, everything being high, but yet commodity prices are depressed. The market, if it's not worried about inflation, it's probably not going to help with the corn prices that much. Unfortunately, it's probably going to get back more towards how much crop we're going to produce, and then get into our demand scenario later on. China really wants nothing to do with U.S. soybeans. They haven't booked anything for since very late summer last year. They probably won't be buying anything until we get into our early stages of harvest once again. So it may be 12 months before they buy any U.S. soybeans. It's just not a market that's going to see a tremendous amount of demand. We may see a lot of our products being shifted towards selling it through animals or selling it into biofuels, because that mandate has been increased, and we will be using more product, corn, soybean oil in our mandates for biofuels.
Okay. Kind of covered a few bases here, but I guess using the baseball analogy, we need to see if we can round the bases and come home on the livestock market. So we'll take a break, be back in a moment with Brian Hoops, Midwest Market Solutions, on Commodity Wrap. This is Commodity Wrap. I'm Tony St. James. On a Wednesday, we saw higher trade, for the most part, in the livestock sector. Live cattle higher, feeder cattle higher, and hogs higher. I'm going to start with the feeder cattle side as we bring back our special guest, Brian Hoops, President, Midwest Market Solutions. And I bring that in because, one, it's had pretty good gains here in 2025, up well over 21%. But when you look at feeders alone, in the first 2 days of the week, nearly every contract, and again, just doing the numbers in my head, gaining a $10 bill or more, and then adding some gains to that on Wednesday. What can we pull from that?
Yeah, it continues to strengthen this cattle market. You know, it's been some technical buying as we push into new high territory, a lot of buy stops being triggered, driving us higher. We haven't really seen much in the way of cash news that has affected our prices. Cash, I think, is going to be at least steady, if not higher, this week and possibly next week as well. Noon cutouts at the midday were lower. That was kind of the one thing that caught some of the trade off guard. After being higher last night, turned lower today. They're probably going to be continue to be choppy to lower if we do increase the kills. And it looks like the Packers are, through the first 3 days of this week, trying to increase the amount of animals that they kill, not that their margins are back in the black. But you look at the Goldman rolls also taking place. So you see some pressure against August. Traders along that August contract move out of it and get into one of the next months, October or December. So that did put a little pressure against the August contract today, and that actually closed lower. But going to be a very strong market, I think. You know, a discount to the cash is going to keep us well supported in these cattle contracts.
Okay, and then we have hogs. Wow. Hogs with a higher close on Wednesday means that my number I had here was 32% higher year to date. We can kind of toss that out. It's going to be closer to probably 33 or so. It's led the entire livestock sector. Is there still room to go higher?
I think there's room to retrace some of the losses that we've encountered over the last 2 weeks. You know, the August contract is the most active, with July going off the board next week. We made a high up in the 113.40 range and pulled back to 105.50. So it means we could go back, move a little bit higher here. If the cutouts stay higher, they were higher at midday. If the cash trade strengthens up once again, there's some room for this August contract to go back up into that 109.50, 110, maybe even 111 area. But I think your highs for the summer months are in. You know, hogs are dependent upon a lot of exports, and China's continued to buy despite the tariffs, but they're also dependent upon summer grilling, consumer demand. And I think we're getting past the 4th of July holiday now. That demand is going to start to slow. It'll affect the cattle. It'll affect all of our meats, including chicken as well as pork.
All right. I'm going to throw a complete curveball here because just looking at other outside markets, and I'll follow you here, but we look at precious metals, gold futures higher, silver lower, platinum lower, and I thought platinum was kind of interesting because we've seen gains of 51% year to date. And when we look at gold and silver, both of those up 25%. So is this a sector to keep an eye on?
They've had really good gains, and most of that came during that real inflationary period when the stock market dropped sharply, and we were concerned that inflation was really going to push higher. There's so much talk about it with the tariffs being enacted, stock market dropping on that news. That's when we really put our highs in the gold and silver. Since that time frame, inflation concerns have started to ease. Stock market has built back all of its gains and added to those gains. It makes you wonder how much the gold and silver can sustain these levels. In fact, gold's starting to show signs that it's making a little bit lower highs, a little bit lower lows, not really selling off, but not finding that strong buying interest once again either. So gold basically steady on the day, with silver down a few pennies. These markets, I think, have had their best runs. Now they're in kind of a cooling off period, maybe more of a consolidation period. And if inflation does come back, you'll see those two commodities really purchased aggressively. But I don't know that inflation is going to. I think those markets have had their best run of the year. Now they'll probably give some of those gains back by end of the year.
All right. Let's get contact information if we want to visit one-on-one, or maybe talk about oats or rice, or I'm trying to find other outside here, palm oil. If we want to talk about any of this, how do we find you, Brian?
Yeah, you can find a list of all of our websites or a list of all of our offices at our website, which is MidwestMarketSolutions.com. I'd love to talk markets with you. We have 9 brokers around the Midwest to help you out. Yeah, you want to reach me directly, the number is 417-501-5132.
Brian Hoops, President, Midwest Market Solutions on Commodity Wrap.